Good morning. I'm Vince Lancy. Gold has overtaken every major macro theme to become the most crowded trade on Wall Street. Yet, even as positioning hits extremes, in the opinion of Hartnett's Bank of America client base, investors still see prices climbing towards 6,200 with tail expectations stretching above 7,000. That's what we'll be discussing today on the Gold Fix Market Rundown. Good morning. It's Thursday. Here are the markets. 10-year yields are up 1. The dollar is up 11. The S&P 500 is down 13. The NASDAQ is down 103. The VIX is up 54 basis points. Gold is up $10 from COMEX Gold is up $10. Silver is up 50 cents, 49.86 and 77.70 respectively. They're off their highs of the evening. WTI is up $1.16, 66.20, above an important threshold for me, a bullish threshold, I should say. Natural gas 3.29, up a penny and a half. Platinum down $1.55. Palladium down $12 and change. Gold, silver steady at 64 and change. Grains are all up. Soybeans trading 11.32, corn 4.24, and change, and wheat 5.62. Bitcoin, which is down the list now, unchanged at 66,473. Really not much keeping it up right now. I don't know why it's going down, but it is going down. Front page, we're going to be discussing the top right-hand story. Hartnett's client base says gold is the most crowded trade. We'll go through the permutations of that and what is and is not consistent. The February Global Fund Manager Survey that Bank of America puts out monthly shows long gold as the most crowded trade for a second straight month, surpassing long tech and short dollar positions. Investors expect a cycle peak over 6,200 with meaningful trade and upside tails above 7,000, while fewer now view gold as overvalued despite rising prices. Fewer now view gold as overvalued despite rising prices. Still number one on the way down. Commodity allocations are the highest since 2022, reinforcing gold's strength. However, contrarian indicators flash caution with position risk prompting suggestions of long bonds versus short gold pair trades. Now, I'm going to give you a take on this. It seems like there's contradictions. On the CTA side, everybody is very underinvested in gold. On the hedge fund side, everybody is underinvested in gold. But the Global Fund Manager Survey, which is your long-only equity guys, are saying too many people are long gold. Okay, the professional take on that is this. They think it's overbought, not that there's too many people long it. There's a difference in the wording, and it's my job to parse those words. They think gold is the most overbought. That makes it the most crowded, but they're not long it. Do you follow? When you're not long something and it's up, you say it's overbought. And mysteriously, last week it was 51% said it was overbought. Then the market rallied, and now only 50% say it's overbought. So you have to look at these things as contrarian. And I say that because in the report, Hartnett was quick to note that the last time, well, he didn't note it this time, I did. The last time they thought gold was really overbought was in June of 2025, and gold was trading 32.75. Now, the market went sideways to slightly lower for about 5 weeks after that, and then August 26th, it started to explode higher. So take it for what it's worth. This might be a good contrarian indicator for gold bulls. Moving on, other news that we had yesterday, gold and PGM mining earnings forecasts were put out. There were a lot of good mining reports that came out yesterday, and the miners are acting very volatilely. Hecla up 5%, down 5%. Kinross earnings came out really well, I believe. Look, if you're looking to invest in the precious metals area, I would say to you, without being an advisor, I would say to myself that the next money I put in will be in miners. And I've been threatening to give a list of miners, and you should know that I've made some progress on that. I'm actually going to be sitting down with CEO Technician and doing that next week in a joint podcast for both of our audiences. But I believe, and he believes that The next run in metals will be because the people who aren't investing just throw in the towel and say, wait a minute, silver and gold are still up here. Maybe we should buy the miners. And then the next forecast will be based on probably juniors and smaller than juniors, the real juniors, the explorers, being purchased upstream by all these companies that have a lot of extra cash flow. So look for the bigger guys to return dividends, bigger dividends, and some of them to start acquiring explorers because let's face it, you really can't press a switch and pump gold out of the ground like you can pump oil out. You need to acquire explorers, and that's probably going to be the next level of that. Silver story so far, we went through that. Founders, why cheap silver is dead. We sent that out this morning to founders. This has to do with price floors. We will have another piece on this coming out later today or early tomorrow on why price floors are a factor in the silver price now. And it's one of the reasons that we are bullish the way we are, or at least violently neutral the way we are. Yesterday, Wednesday, Fed minutes came out, and you'll notice that after the Fed minutes came out, or even before the Fed minutes came out, silver and gold were smacked down at 130 when the COMEX closed. Well, the fact that the market is back up, so if you're looking at futures, you'll see that silver and gold are down because they're down from the 130 close, but they're up from the COMEX close. So the bottom line here is the selling at 130 didn't really have a lot of strength to it. And now the market is climbing back up. So that's it. I'm Vince, and stay with us, and we'll have a lot more for the week. But let's do a little bit of chart work here. I'm ending prematurely. Okay, so we'd be remiss to not mention oil again because I'm bullish oil, but I don't have anything on. There's my level. Above 66 and change is where I have a signal to pay attention. Now I'm bullish. I have been bullish, but I haven't had a position on. So my opinion means nothing, right? I have an opinion in no position. That's just an opinion, right? But now we're at an area where I need to make a decision. That decision is either to get long or do nothing. Uh, some people might want to consider shorting it here, but I look at this. For those of you who are familiar with this from silver, it's not a measured move, but it's similar, right? So you have a depth equals distance, 66 down to 62. That's $4. You can actually go all the way down to here, but I'm going to 62. You can add $4 to this, $70 would be on the radar. If you went to the lower price, which is 61, you'd be $71. Okay, so I am of the opinion that this market can run to 70 and $71, which also coincidentally works with my floor concept. Now, silver, great day yesterday. I can't tell you how good of a day it is for me, for my heart condition, let's put it that way. This was the area that I said below 75, I start to pay attention, and I get really nervous below about 71, $70. And of course, the market stopped, turned around, and rallied. Now, the day's not over yet. The week's not over yet. But I believe that given that this is Monday was up, Tuesday was down, Wednesday was up, Thursday and Friday should be higher. This should be higher if it's a trend week higher. And it feels like a trend week higher. There's your knife being caught, right? Drop and catch, drop and catch, not really catching a lot, drop and catch, and now the buying remains there. We believe the buying is real. We believe the buying is there, but that's not to say that we think the market's getting over $90. We think the market's going to have a hard time getting above $82. But above $82, it should go to 84. So that's our take on silver. Gold looks better, right? Remember, there's your bear flag. There's your bear flag violated. There's your hiccup. There's your catch the knife, catch the knife, catch the knife a little bit less, catch the knife a little bit firmer. So I believe I could say with a high degree of confidence based on these chart patterns that there is big buying in gold and silver. The question is it patient or not? And it has been patient here. Became a little less patient, a little less patient, a little bit more patient, but it's stopped. It's not getting back to here, at least for now, knock on wood. So I believe there is big buying in these markets, and that buying will return when the Chinese New Year wraps up. Happy New Year, by the way. Also, I want to drop a thank you to Jake for a couple guys had asked us to put up ways to donate, and we're not one to do that too much, but we put up a coffee to buy a coffee for people, and that's specifically for the interns. Jake bought a couple coffees for Charlie, and he bought a couple coffees for the boobs and bullion girl, Ahafia. So we appreciate that, and we forwarded your well wishes as well as your money. I'm Vince. Have a great day.